Hey everyone, ready for another deep dive into the market? Today we're looking at October 28th, 2024. Oil prices took a plunge, stocks were up, and everyone's waiting to see what happens with those big tech earnings.
Yeah, a lot going on. Definitely a day where it's important to kind of step back and see what's really important.
Okay, so let's start with oil. WTI crude dropped 5%, ending up below $68 a barrel in natural gas. Well, that plunged almost 10%. Now, anytime you see a drop like that, it can be a little unnerving, but this might actually be good news for us.
That's right. Lower oil prices mean businesses are going to have lower costs. And hopefully some of that trickles down to us and we see things like lower gas prices and maybe even some goods and services getting a bit cheaper.
Well, that's what I like to hear. Of course, we can't talk about oil without talking about what's happening in the Middle East. The ceasefire talks in Gaza and that Israeli strike against Iran definitely had a lot of people on edge.
Yeah, but what's interesting is how the market reacted. See, there was this initial fear that the conflict was going to mess with oil production, but when it became clear that wasn't happening, things calmed down. Actually, it looks like that's part of what pushed the stock market up today. Really goes to show you just how connected geopolitics and the markets are.
Definitely. And speaking of things that usually make the market nervous, we've got the U.S. elections coming up. But you wouldn't really know it looking at how calm things are right now, would you?
Nope. The VIX, which you can think of as like a fear gauge for the market, is sitting pretty comfortably below 20. And just to put that into perspective, back during the 2020 election week, the VIX was way up over 30.
So does that mean we don't have to worry about the election affecting our portfolios?
Well, I wouldn't say that just yet. Things can change quickly, especially the closer we get to election day. The market really doesn't like uncertainty in elections. Well, they're definitely full of that.
True, true. So we've got all this geopolitical stuff and elections on the horizon, but there's another big thing this week that's got everyone's attention. The Fed's interest rate decision. Seems like the market's pretty sure we're going to see another rate cut.
Yeah, pretty much everyone thinks the Fed's going to cut rates by another quarter point. And this is a big deal because it can affect so much, from how much it costs to borrow money to corporate profits.
And speaking of things that are affected by interest rates, we can't forget about bond yields. The yield on the 10-year Treasury note has been going up, and it even hit its highest point since July today. That seems a little strange, doesn't it? I mean, usually when rate cuts are expected, yields go down.
Yeah, you'd normally think so. So this whole upward trend in yields, even with the expectation of rate cuts, it kind of tells us something interesting's happening. It could be that investors are feeling good about the economy growing in the future and they're okay with getting lower returns on those safer investments like bonds. Or it could be that they think inflation's going to go up later and those higher yields would help balance that out.
So it's like investors are reading between the lines and getting ready for what they think's coming next.
Exactly. The market's always trying to figure out what's going to happen in the future, and sometimes we see these mixed signals like we are today.
Makes sense. Okay, so let's look at some of the specific companies that were moving in the market today. Financial stocks were definitely doing well, probably because of those rising yields we were just talking about.
Right, makes sense. Financial companies usually do better when interest rates are rising. Higher rates mean they can charge more for loans, and that means more profits for them.
It's always interesting to see how different sectors react to what's happening in the market. And speaking of interesting, some individual companies really stood out today.
Yeah, for sure. Like 3M, that industrial giant got a bump after JP Morgan Chase said they thought the stock would do well. And chip makers AMD and Intel, they both went up too. Investors are looking forward to those upcoming earnings reports. Looks like the AI excitement is really catching on.
And then there's McDonald's. Their stock is doing better after that E. coli scare last week, up over 1% today. But not everyone had a good day, right? Taiwan Semiconductor, or TSM, went down after reports came out that they had to stop shipments to a Chinese chip designer because of those U.S. trade restrictions. Just a reminder that what's happening globally can really directly affect individual companies.
Oh, and we can't forget about Ford. Even though they did better than expected on earnings, their stock actually dipped in after-hours trading. Investors seem a bit worried about their long-term plan in the electric vehicle market. Shows that even if a company does well on an earnings report, it doesn't always get rid of those underlying concerns.
Yeah, sometimes investors are thinking about the bigger picture and trying to figure out what's going to happen to a company over time, not just right now.
Right. And on that note, we can't finish this part of our deep dive without talking about the big thing everyone's waiting for. The earnings reports from those mega caps, Alphabet, Microsoft, Amazon, Meta, and Apple. These companies are really important for the entire tech sector, and they often have a big impact on the market as a whole.
It's going to be quite the week for tech earnings. With all the talk about AI, I'm really interested to see how these companies are using it in their businesses. Are they actually seeing results, or is it all hype?
That's the big question, isn't it? Let's jump right into those mega cap earnings reports. Everyone's been waiting for these, especially with all this AI stuff going on. Alphabet was the first one to release their report, and well, there were some interesting things in there.
Okay, yeah, Alphabet's huge. What they do can really give us a sense of how the whole tech sector is doing. What stood out to you?
Well, their main businesses, search and cloud computing, they're still doing really well. Shows you how strong they are in those areas. But YouTube's ad revenue growth, that's slowed down some more. Something to keep an eye on for sure.
Hmm, interesting. So it seems like Google is doing great, but YouTube's not keeping up. What do you think is causing that?
Could be a few things. You've got more competition from other video platforms, and then there's all that stuff about brand safety and content moderation on YouTube. Some advertisers might be a little hesitant to spend as much until those things get sorted out.
Yeah, that's been in the news a lot lately.
Hmm?
So where does AI fit into all this? Did Alphabet say anything about how they're using AI to grow in the future?
Oh, yeah. AI was like the main topic of their earnings call. They talked a lot about how they're investing in AI and putting it into all their products and services. It's pretty clear that they see AI as a big part of their future.
Sounds like they're not just talking about AI, they're actually doing something about it.
Exactly. And it's going to be really interesting to see how that actually plays out over the next few quarters. Will they get more users? Will people use their products more? Will they find new ways to make money because of AI? That's what investors will want to know.
Good points. It's one thing to talk about AI, but companies have to show how it's actually helping their business. All right, so let's take a look at all the economic data that came out this week before we get to the other tech giants. We had JOLTS, consumer confidence, PCE, and of course the jobs report. Where do you want to start?
Let's begin with the JOLTS report. That one shows us how many job openings there are and how people are moving between jobs. Gives us a sense of how healthy the job market is. The September report showed a little dip in job openings, which could be a good sign that we won't see wages going up too much.
So maybe the job market isn't quite as tight as it has been.
It's possible, but the number of job openings is still really high compared to the past. So it looks like hiring might be slowing down a bit, but companies are still looking for people.
That's good news for anyone who's looking for a job or hoping to get a raise. Okay, what about consumer confidence? How are people feeling about the economy these days?
Well, that consumer confidence index went up a bit in October. Means people are feeling a little more optimistic, but it's still lower than it was earlier this year. Shows that people are still a little unsure about things.
Sounds like people are hopeful, but not quite ready to celebrate just yet. How about inflation? The Fed's been really focused on bringing that down. Did the PCE report tell us anything new?
The PCE, that's the inflation measure the Fed likes to use, and it went up about as much as everyone thought it would. Core PCE, that's the one that doesn't include food and energy prices, that stayed pretty stable too.
So inflation's behaving for now. Does that mean the Fed can relax and not worry about cutting rates again?
Not so fast. Inflation might be okay right now, but the Fed's going to be careful. They want to see the economy growing for a while before they change what they're doing.
All right, they don't want to get ahead of themselves. Okay, last but not least, the jobs report, the non-farm payrolls. This one always gets a lot of attention because it tells us how the job market is doing overall.
Right, so the October jobs report, it wasn't as strong as everyone thought it would be. Job growth slowed down compared to last month. The good news is that the unemployment rate stayed the same and wages didn't go up too much.
It's kind of a mixed bag when it comes to jobs. Not bad, but not great either. How do you think this is going to affect what the Fed does with interest rates?
Well, this jobs report being a bit weaker, it could give the Fed a reason to wait before they cut rates again. They'll want to figure out if this slowdown in hiring is just a temporary thing or if the economy is actually weakening.
So the Fed's got a lot to think about before their next meeting. But for us, regular investors, what does all this economic data mean? There are a lot of different signals out there.
You're right, the economy is always changing, which is why it's so important to stay on top of things and be ready to adjust. Pay attention to these economic reports, try to understand what they could mean for different companies and industries, and then adjust your investments if you need to. Don't be afraid to change things up when new information comes out.
So being flexible is important. Now, before we move on to those other mega cap earnings, I want to go back to Ford for a minute. Their stock went down even though they beat earnings expectations. Can you explain a little more about why investors might be worried about Ford, even if they're doing well right now?
Yeah, I think a lot of the concern comes from the whole electric vehicle thing. Ford's trying to switch to making more electric cars, and that's a really big change. They're having to spend a lot of money on new technology, factories, and charging stations, and no one really knows for sure how many people are going to buy electric cars in the future or if Ford's going to make a lot of money from them.
So even if Ford is doing okay today, investors are worried about whether they'll be able to keep up with the changes happening in the car industry.
Exactly. It just shows that how a company is doing right now doesn't always tell the whole story. Investors are trying to figure out what's going to happen in the long term and make their decisions based on that. Okay, so let's get to those other mega cap earnings reports. Microsoft, Amazon, Meta, and Apple are all going to release theirs this week.
It's going to be a big week for tech investors. Each of these companies is so big, and their reports will give us a good idea of how the whole tech sector is doing.
Absolutely. And since everyone's talking about AI these days, it'll be really interesting to see how each of these companies is using it.
All right, so we've talked about a lot today, from those crazy oil prices to what's happening with the mega cap earnings. But as we wrap up, I want to leave you with something to think about.
Yeah, always good to have something to mull over, especially with so much happening in the markets.
Exactly. So we've seen kind of a mixed bag out there, right? Job growth is slowing, inflation seems okay for now, and earnings, well, some companies are doing great and others aren't. What does it all mean? Where do we
Mm.
go from here?
Ugh, the big question. Wish I had a crystal ball, but unfortunately I don't. The best we can do is use what we know to make good decisions. We've looked at all the important economic numbers, we've gone through earnings reports, and we've talked about what might happen with the election and the Fed.
So it's all about putting the pieces together and figuring out what it means overall.
Yeah, exactly. But sometimes that big picture can be a little fuzzy. The market's a complicated thing, and there are always going to be things we can't predict. That's why it's so important to stay informed, keep learning, and be ready to change course when things change.
I like that. Stay curious. It's not just about making money, it's about understanding how the market works.
Couldn't agree more. And don't forget, investing's a long game. Don't get too caught up in the day-to-day ups and downs. Think about your long-term goals and make sure your decisions are helping you reach them.
Great advice. Well, thanks for joining us today for this deep dive and sharing your thoughts. It's always great to have you here.
Thanks for having me. Always enjoy these conversations.